Greetings to one and all. You are listening to MMJC Fortnightly Podcast. In earlier edition of our podcast, we discussed about consolidation of accounts of holding subsidiary and associate companies with that of reporting company. In this edition, we shall discuss about selection of appropriate EC4 for filing of the financial statements. Guide us in this regard, we have with us CS Vallabh Joshi from R&D team. Welcome, sir.
Thank you, Vora.
To begin with, let's start with the factors that we need to consider while selecting the appropriate e-forms. Sir, can you please tell us those factors?
Yes, Vora. There are three main determining factors to be considered for identifying the e-form. Those are
First is nature of business activity. Second is applicability of Ind AS and applicability of reporting in XBRL format.
Ind AS and XBRL formats. First, let's discuss about those only. Anyways, the applicability of both these things overlaps with each other and creates a lot of confusion. As far as legal provisions are concerned, reporting in XBRL rule 3 tells us about its applicability, and about Ind AS, the company's Indian accounting standards rule 4 talks about the applicability. Am I right?
yes, you are right. And we also discussed
Applicability of We'll talk about applicability of Ind AS and XBRL. So as per rule 3 of XBRL rules, companies having paid up capital of 5 crore or more, or a turnover of 100 crores or more, or companies to whom Ind AS is applicable are required to report their financial statements in XBRL format. However, NBFCs are not required to report their financial statements in XBRL format. Rule 4 of Ind AS rules says that companies who are listed on stock exchanges or whose net worth is more than 250 crores are required to prepare their accounts as per Ind AS.
So if we consider both these eligibility requirements carefully, we see that there are some companies to whom XBRL is applicable, but Ind AS is not applicable. For example, such reporting companies whose turnover is more than 100 crores, but net worth is not more than 250 crores. And similarly, but there cannot be any such company to whom Ind AS is applicable, but XBRL is not applicable. Other than NBFCs, of course, who are exempt from XBRL requirements. But what about the requirement of reporting in these formats applicability to holding subsidiary and associate companies? I mean, if XBRL or Ind AS is applicable to a reporting company, then will it be applicable to its holding company, subsidiary, and associate as well?
XBRL rules are transferred. If XBRL reporting
Is applicable to a reporting company, it will be applicable to its subsidiary as well, but it will not be applicable to the associate or holding company of the reporting company. Further, with respect to Ind AS rules, if Ind AS is applicable to a reporting company, then it will be applicable to its holding company, subsidiary company, associate company, and joint venture company as well. For example, if A Limited is subsidiary of B Limited and B Limited is subsidiary of C Limited and B Limited is the reporting company, in case of applicability of XBRL, if XBRL is applicable to reporting company, that is B Limited, then it will also be applicable to its subsidiary A Limited, but it will not be applicable to its holding company, that is C Limited. Further, in case of applicability of Ind AS, if Ind AS is applicable to reporting company B Limited, then it will be applicable to its subsidiary company A Limited as well. Also, it will be applicable to the holding company C Limited. Therefore, while checking the applicability of Ind AS, the reporting company should check the applicability to its holding company, its subsidiary company, and to such company to whom the reporting company is an associate. Also, one more point very worth noting is that if both Ind AS and XBRL are applicable once to any company, they shall remain applicable to it throughout the life of the company.
Now that we've explained all the factors about applicability, that is Indians and XPL, so please also explain the third factor, that is nature of business activity of the reporting company.
The determinant nature of business activity relates to the fact that whether the reporting company is a non-banking financial company, that is NBFC, or not. As discussed earlier, Ind AS is applicable to NBFCs, and at same time, NBFC is exempted from applicability of XBRL. Further, a separate e-form AOC for NBFC is prescribed by MCA, that is Ministry of Corporate Affairs, for use of NBFCs for filing financial statements. Therefore, it is essential to find out whether the nature of activity of reporting company is falling under the category of NBFC or not. The way to find out is that the term NBFC is defined Rule 2, Clause G of Companies Indian Accounting Standards Rules. This definition says that NBFC means a NBFC as defined under Clause F of Section 45 of the Reserve Bank of India Act 1934, and also includes some more businesses like housing finance companies, merchant banking companies, microfinance companies, mutual benefit companies, venture capital fund companies, stockbroker or sub-broker companies, nidhi companies, kit companies, securitization and reconstruction companies, mortgage guarantee companies, pension fund companies, asset management companies, and core investment companies in the definition of NBFC. Therefore, if the nature of activity of the reporting company is such that it falls in any of these businesses, then it will also be considered as NBFC, and we will have to select the e-form accordingly.
I have clearly understood about all the factors that we have to consider while selecting the e-form. Now, next question arises is that which e-form is applicable to which category of company? So, firstly, tell us which e-form will be applicable to such company to whom neither XBRL is applicable nor NBS is applicable, and neither is it an NBFC.
Yes, if India's and XBRL both are not applicable to any company, then it will have to prepare its financial statements as per Division 1 of Schedule 3 of Companies Act 2013, which is the format for preparing the financial statements. After the financial statements are prepared in such format, they must be filed in e-form having nomenclature AOC 4.
What if consolidation is applicable to such a company?
If consolidation is applicable to such reporting company and it has prepared consolidated financial statements, then while filing such consolidated financial statements, Form AOC 4 will have to be filed, but the company will have to select the option for consolidated financial statements while filing that e-form. One point to be noted is that AOC for CFS asks for the approved SRN of the Form AOC 4 filed for standalone financial statements. Therefore, the reporting company must take care that it first files the standalone financial statements, and after the approval of Form AOC 4 by the MCA through STP method, it should file consolidated financial statements in Form AOC for CFS.
Now let's move to the next category. What about such reporting companies to whom XBRL is applicable but Indies is not applicable? For example, such companies whose paper capital or turnover is more than 100 crore, but net worth is less than 250 crore.
In case of such companies, since Ind AS is not applicable, financial statements are to be prepared as per Division 1 of Schedule 3 only, but the statements are to be filed in Form AOC for XBRL. The company is required to generate instance using XBRL taxonomy named IGAAP, IGAAP, all in capital, where Ind AS is not applicable, and then file this instance in Form AOC for XBRL. Now, in case of consolidation, two separate instances are to be generated, one for standalone financial statements and the other for consolidated financial statements, and then they are to be attached in the same form, AOC for XBRL form, and there is no need to file two separate forms for this purpose.
The next category is of those reporting companies to whom Ind AS is applicable, but they are not NBFCs.
As discussed earlier, all companies to whom Ind AS is applicable need to report their financials in XBRL format only. The only exception being the NBFCs. Therefore, the e-form to be used by such companies for filing financial statements is AOC for XBRL only. The difference is in the format of financial statements and taxonomy of XBRL. The companies to whom Ind AS is applicable, okay, but they are not NBFCs, are required to prepare financial statements as per Division 2 of Schedule 3 of Companies Act 2013, and the XBRL taxonomy to be used by such companies is called Ind AS taxonomy.
Consolidation, like you mentioned earlier, two separate instances are to be attached in same form AOC for XBRL, and no requirement of two separate forms is there. Now, the next category is about such reporting companies whom Ind AS is applicable and they are NBFCs. Which form is required applicable to these companies?
As NBFCs are exempt from the provisions relating to XBRL, they are not required to file Form AOC for XBRL despite Ind AS is being applicable to them. A separate e-form AOC for NBFC is applicable to such companies. These companies are required to prepare their financial statements as per Division 3 of Schedule 3 of Companies Act 2013 and are required to file such statements to ROC in Form AOC for NBFC. In case of consolidation, the company should select yes option for applicability of consolidation in AOC for NBFC and then file a separate Form AOC for NBFC CFS for consolidated financial statements along with approved SRN of AOC for NBFC or standalone financial statements.
So that means AOC4 and AOC4 NBFC, if consolidation is applicable to such company, then they will have to file a separate AOC4 CFS for filing consolidated statements by entering the SRN of standalone form. So, do you want to highlight any specific point in this regard?
Yes, there is one point worth noting, as you rightly mentioned in the Form AOC for CFS and AOC for NBFC CFS, approved SRN of Form AOC4 or AOC for NBFC for standalone financial statements must be mentioned. But MCA takes around 24 hours to approve an SRN, and unless SRN is approved, it cannot be entered in the CFS form. Otherwise, it shows an error. Therefore, the companies are required to take this timeline into consideration while filing the forms. The companies can file the form for standalone financial statements on the first day and then file for consolidated financial statements on the second day after approval of SRN. This point is of higher importance if the forms are being filed on any date that is very close to the last date of the form filing itself.
So now, benefit of our listeners, can you please highlight what is the last date or due date for filing for AOC4? And also please highlight about the inclusion of event date, that is date of AGM, in the calculation of timelines.
Yeah. As per Section 137, subsection 1 of the Companies Act, the due date for filing Form AOC4 is within 30 days of the date of annual general meeting. That means if annual general meeting takes place on the 30th of September, Then the last date for filing AOC 4 form will be 29th of October. That is 30 days from the date of annual general meeting. Now, about your question pertaining to inclusion of the event date, that is the date of AGM. In this case, in calculation of due dates, it has been noticed from the fees calculator of Ministry of Corporate Affairs on the Ministry of Corporate Affairs website that wherever the language of the act uses the words X number of days of the date of event, there the event date is included while calculating the last date. So I'll explain this with the help of an example. The provision that I mentioned just now, that is section 137, subsection 1, uses words within 30 days of the date of AGM. So in this case, it includes the date of AGM while calculating the 30 days time limit. Whereas section 92, subsection 4, which prescribes the due date for filing of annual returns, uses the word 60 days from the date of AGM. Therefore, in this case, the event date, that is the date of AGM, is not included while calculating the 60 days timeline.
Or
Yes, yes, correct.
that was a very, very detailed and interesting discussion, sir. Thank you very much for your insights.
Okay, thank you, Rutuja. Uh, we have given our email ID on this screen, and listeners are requested to please share their feedback on our podcast. Thank you.